The following segment is sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. Is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Thank you, Al. It's great to be back.
The Dow seems to be headed north. Gold is meandering, and junior mining companies are languishing in the doldrums still. Are things about to change with the economic data that's been released during the last week?
I do think things are about to change. If you look at the gold XAU ratio, it's, I think, 2 sigmas, I was told recently, off. In other words, this is an anomaly. You don't usually see this big a discrepancy between the price of gold and the underlying mining equities. It's huge. So it's a big opportunity, but people don't see opportunities until it's the 2020 rearview mirror type of thing. So it is an opportunity. It just takes some conviction, and of course it's been dragging on and going sideways to down for quite some time. Nonetheless, an opportunity is an opportunity. Again, looking back, everyone will see it, but for right now it's hard to see, but it's right there in front of us.
Okay, so you and I and a few of the other analysts may be optimistic, but many of the companies I've been speaking to just aren't there yet. They're just not there yet. Why is that?
Well, I think we're going to see another shakeout. I mean, in all honesty, there's a lot of juniors out there that don't have much merit, and so they are not going to be able to get the funding they need to continue, and they don't have enough real assets, or at least discovered, that they'll be bought out or merged. So I think you're going to see another shakeout like we've already seen once in the mining cycle, where some of these story stocks will just go away. So it's one of those things that I really try to caution our members of the Morgan Report about, and that is when you do a speculation, bet money you can afford to lose. You know, you should have at least 5, preferably 10, equal dollar amounts in all of them. Everyone likes to know, well, what's your favorite one? You know, anytime you give a favorite, it's going to do the opposite. It's really hard to know because the market always seems to know more than anyone, myself included. That's the way to approach it. Now, there have been times when we've had what I'll call rank speculation, and we continue to watch the story, and it becomes a growth stock. And we put out a curve on that recently in one of the Morgan reports showing a plot that really comes from Pierre Lassonde, one of the most respected mining guys in the industry, about how a discovery goes and what the price does and what goes through the mining cycle and where the sweet spot to buy a stock or a company is. Sometimes we get lucky or serious with our work, whatever you want to term it, and we've hit that a few times. So we would actually have a speculation that turns into a company that was very robust. Western Copper, which became Western Silver, is one of those. We had it basically as a speculation as the story unfolded and the drilling continued and on it went. We actually added to the position as the story unfolded, if you will. So there are reasons to add to these small cap companies that become, giants over time. It doesn't happen that often. I think the main problem with some of the juniors is everyone thinks that they've got one that's going to do that. My experience is if you do it once or twice, consider yourself extremely lucky. Because to think you can do it 3 times, it's phenomenal. We've probably had that track record, but also I've been doing this for 40 years. I've been investing in mining equities since I was 118. Again, caution, but it's a great place to be. It's just understanding risk. Most people, again, use too much risk trying to make too much money. Usually risk and reward go hand in hand, but you got to be smart. When you buy a lottery ticket, if you buy one, that's a low risk, and if you win, that's a high reward. And that's kind of the idea on some of these juniors. The mid-tiers, you can afford to put more money in because there's more information. The top tiers, you can afford more money because the whole story is pretty much there. So this is how we do our portfolio analysis, is to basically weight the portfolio where your risk is mitigated, but you still have chance for a high return.
So really, right now, unless a company is near production, going into production, or in production, if they don't have any money in the bank, if they're still a grassroots exploration company and they're a junior, you must write them off.
Pretty much. I mean, I hate to be harsh, but, this thing has dragged on for almost 2 years now, and a lot of these companies are not going to be able to raise more money. And if they can, and I think that's questionable, but let's say they can, they're going to dilute so badly on their shares because they'll be borrowing money or using equity and diluting so much that they would have to have a spectacular find in order for the present shareholders to make any money. I mean, this is just a fact of the market. I don't want to be harsh. I just want to be truthful. And that's the way it is. Again, the one thing I've seen in this business over and over and over is most people buy too many junior mining companies. They don't buy the top tier or the mid tiers where you pretty much got an investment. They are doing rank speculation and, again, thinking they can pick the right one and they're going to go, this one's going to give them an easy retirement or whatever their goal is. These are fantasies most of the time, unfortunately. And, it's just the way it is. I mean, I'm just telling it like I see it. Again, there's a way to approach the market that puts the odds in your favor, and that's by balancing correctly.
So it's a bit worse than Vegas odds right now. We can perhaps say that 90% of the juniors aren't worth looking at. Just to pick a number, is that correct?
So I don't know what the exact number is. I don't think anyone does, but I just read an article by Brent Cook, and he said that about 30% of the junior market's just going to be gone. They're just, what I said earlier, they won't have the money, and they don't have an asset that's worth enough for any company to want to buy them out. And I think that's an accurate number. So you could probably kiss away about 30% of the market, which is, roughly a third. And that's just a number he came up with. I tend to agree with that. Again, look carefully. It's a new year. It's a good time to, everyone has their New Year's resolutions, or most people. It's a good time to check out what you own, why you own it, and there's nothing wrong with taking a loss. The best hitters in baseball strike out a lot. The best quarterbacks throw interceptions now and again. I mean, no one gets it right 100% of the time in the investing market. But part of the strategy is to admit when you're wrong and move on. And I just might take a moment, Ellis, and tell you that we have one in the junior sector, and this is a gold situation, and this has got grades that are, believe it or not, the grades here are round numbers, 100 grams per ton. I mean, this is extremely high grade. Now, the high grade thing doesn't really get me excited because I see it from time to time, but it's over very small intervals. In other words, during the drill, they've got 6 inches of an ounce per ton or something like that, or 100 grams per ton, but it's a small interval. In this particular case, one of these drills came back, and it's over 10 meters. And then on another drill that they have was about half that size, and the grams per ton on that one were basically off the charts. This is one that we actually gave out to our mastermind group some time ago, and the stock went from roughly 3 to 4 during this rather lousy market. So someone's paying attention. This is one that we look at almost everyone else's work. I haven't seen anyone else has picked up on this particular company. It's something that we are going to be putting out, not in the February issue that comes out this weekend, but we'll be putting it in the March issue of the Morgan Report. Speculation, yes, but the old adage, grade is king, applies to us. We really like that. The higher the grade, the more margin you have. There's lots of reasons for that. In fact, there's a special report within the members-only portion of the website called Archie's Rule. Dr. Peter McGaw actually did the lecture for us. And if you're really serious about making money, really serious about it, then this is something you really ought to study and find out what the real cost of mining are versus what the expected price of the metals are and what kind of margin you need to have a viable business. And those numbers will surprise you. So it's a good way to just kind of have a rule of thumb to say, if this company has this asset, it costs this much to get out of the ground, the price of the commodity is this, and is the margin, and there's a factor there, is the factor that or greater than that? And if it's not, really you have no business being in that company. And again, coming back to what we talked about earlier with the Brent Cook article, this is the kind of analysis you could do on some of those companies. A lot of them you don't have enough data, and say, this doesn't make any sense. There's no reason to own this.
Let's do the math on that 100 grams per ton of gold. What is that potentially?
About 3 ounces of gold. So if you go to $1,500 an ounce, I can do it in my head, that's $4,500 a ton, $4,500 a ton. The Red Lake District with Goldcorp had some phenomenal grades as well. But this is the kind of company that if you get in early can actually make you some substantial money. These kind of mining companies are the ones that will outperform gold. They just always do. There's no reason to think this one won't. Even in a market like this where no one's paying attention, and it's a buying opportunity in 2 ways. One, I don't think anyone really knows about it. 2, it's at the bottom of the market, it's the bottom of the cycle. Even as bad as the market is, this company is $1 move on a $3 stock. That's a 30 3% gain. Silver Wheaton had a great year last year. They're up like 22%, but silver's only up 8%. So that shows you that the right choices of mining companies do outperform the metal, but they're few and far between. But right now, no, I don't want to overamp this. I get called a lot of things. I don't really care. I do my job. I do the best I can. I'm human. I do make errors. But this one is one I like. It's one that, again, we're going to be putting out to our basic readers. I mean, this is, if you would, spend money to get research analysis done, and we've already done it because we did give it out to, like I said, our top tier people some time ago, and now I'm confident letting the other members have it. The reason for that is a lot of the risk has gone away from further drilling. So I like it enough, and I think it's safe enough to give it to people because, quite honestly, to repeat myself, a lot of people will see this kind of story and they'll buy too much of it. Something could go wrong, but boy, if you're going to speculate, this is the type of speculations that I like to do.
So you're not going to tell me who the company is? I feel like I'm on a second or third date and I'm being teased a little bit, David.
Yeah, I know. Well, sorry, I got to make a living. And I have to be fair. I mean, basically, the SEC is very strict about giving individual investment advice, so you basically have to put it out to your paid membership first, and once that's accomplished, then you can pretty much start talking about it.
Okay, fair enough. Speaking of paid, we have a paid sponsor of this program and this segment, El Tigre Silver Corp. We were both at the Vancouver Resource Investment Conference very recently. I understand you mentioned El Tigre in your workshop there.
Right. First of all, full disclosure, I own El Tigre. It's a speculation, so it's a small portion. I like Stuart a lot and what he's doing, and junior mining industry is extremely difficult, but they're spending their cash carefully. They're getting good drills. They also have a tailing situation that pretty much, based on their economic analysis, is going to feed cash into the company. So I like those kind of safety factors, and while they've got what I call that safe factor surrounding the story, they also have the ability to go out and, drill more and probably get a better asset or determine the size of an asset. Would I say it's as good as the gold company I was just hinting at? Probably not. But as far as the silver space is concerned, I like this company. I like El Tigre. I did mention it in the workshop. I said, if you want to take a look at some of the criteria that I like, I mentioned what I just said. The reasons being, is this one is going to be blow off the charts and go crazy. I don't know. I always get asked, what's your favorite little mining company? And I don't answer that question because the market always seems to baffle all of us. The ones that you think would be better than others don't really come out that way or whatever. So it's a good idea when you are in the speculation mode to just buy a basket. But I do not like, 100 or 30 or I think 10 is plenty. I don't like the idea that you buy 100 junior mining companies. I know, and I won't name names, but some of the better known guys in the industry that would have 100 junior mining companies. This is way back early in the cycle. But still, my approach is different. My approach is different than a lot of other approaches. And there isn't a right or wrong to it. It's just what I've determined to be a good approach that works and, again, mitigates risk and helps keep the reward high.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
And we're back. I'm on your website right now, themorganreport.com. My eyes are going to these words because they're bold. Buy, and buy some more. Okay, I'm here. What do I buy? How do I do it?
What I'm talking about is that we're at a bottom, especially for the mining equities. And as we talked about early in the show, that, we're 2 sigmas off. I mean, this is an anomaly. This is something that only happens like once every 30 years. If I could tell you to buy something that only occurred every 30 years, that's how rare it is. Most people would listen up. I mean, if you could buy a rare automobile that the price was a 30-year low and you were a car collector, saying, oh my God, I'm jumping on that deal, or fine art, or whatever happens to be of interest to a particular individual. But you say, hey, the mining equities are dirt cheap, you're getting real value, here's the ones to pick, people just ignore you. And that's a bottom. I mean, I've seen bottoms enough in my life to know, from my experience, that people don't buy bottoms. And that's unfortunate, because 6 months from now, when these stocks have moved up at a fairly rapid clip and we're doing your show, say, well, what happened? I'll say, well, remember back at the beginning of 2013, February 1st, and I said, this is a bottom and you should be buying it, that there wasn't any volume, but now the volumes are record volumes, and people are jumping in, but the prices are up 50% or whatever they are. And is that 6 months down the road or not? I don't know, but I know we're going to get there, and I think it's going to start this year. So be selective, take your time, do your homework, and don't be afraid.
And get a little help by perhaps subscribing to the Morgan Report.
Thank you for that. And it's not just the Morgan Report. I mean, there's a lot of guys out there that are very serious about this industry. We are, of course, but there's others as well. One thing I will caution people, and that is the Morgan Report is not a first-time newsletter reader's periodical. It really isn't. It's for people that have some investing experience, what I call seasoned investors, somebody that's taken a loss, someone that knows financial terms, and that type of thing. I mean, if you just want to learn and you're a college student, you don't know anything about investing, and you have the attitude of whatever I don't understand, I'm going to look up on Google and do my own research, that's fine. But if you think this is a beginner's newsletter, it is not. This is for a rather sophisticated audience. And we don't try to talk over anyone's heads. We do put it in a vernacular that's suitable for anybody. But nonetheless, you can't get around it. When you're in the mining industry, you're going to use mining terms. And so even though we have a glossary on the member section, you can look up all this stuff. It's something that if you've never invested in the mining stocks before, this is probably not the best place to start.
Now, you're also recommending a sister website for those that are ready to acquire serious research about a select group of resource companies before possibly investing. Tell us about that.
Yeah, the last thing is, Ellis, as much work as goes into the Morgan Report, I think the other sister site, Riches and Resources, that's richesinresources.com, and these have individual reports, and you can just buy these. So if you're going to invest in an XYZ mining company, but you're not sure, you can buy one of these reports. I think they're $39 or $49, and that might save you a lot of heartache down the road. Just find out what the financials are in the company, how much money they have in the bank, what the projected internal rate of return is, what you expect. And again, I think it's money well spent. Conversely, if you're already in a company and you're thinking, well, should I sell it or not, you could buy a report. Now, we don't have every report, and this is really not, I say it's a sister website, and the reason I say that is some of the independent guys that do research for us started this website, and they continue to put up report after report. We have a little box on there that says, I'd like to find out about such and such mining company. Doesn't mean we'll do research on that one, but it's market driven more or less. So this is something I think people can look at, richesinresources.com. If you're thinking of buying a company, you might be able to find a report on it before you buy, or if you're in a company you want to find out, should I hold it or maybe sell it, you could also buy a report on that company. Now, are all the companies in there? No. The site will grow over time, and again, there's a box on the site that says, geez, I really would like to see a report on, and you put the name of the company in the box. Again, it doesn't guarantee that these guys will do it, but it does offer an opportunity to at least get your wishes known.
Well, thanks for sharing that information with us, David. Again, that website is richesinresources.com. Thanks for joining me on the program today. I look forward to speaking with you again soon.
My pleasure. Thank you.
I've been chatting with David Morgan of themorganreport.com. I'm Ellis Martin. Listen to this segment again on the podcast page of our website, ellismartinreport.com. This segment has been sponsored by LT Gray Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com.